Hello everyone, welcome to our presentation. We are Group 19 and our presentation topic is Small and Medium Enterprises and Relationship Banking. Now let me introduce our outline for you. Our presentation will be divided into 4 parts. First part is introduction, second part is the risk and return of small and medium enterprises. The third part is the risk and return of relationship banking. Finally, the results and recommendations will be also provided at the end of presentation. Firstly, let me introduce the definition of small and medium enterprises for you. Small and medium enterprises are businesses whose personnel numbers fall below certain limits. Small enterprises outnumber large companies by a wide margin and also employ many more people. Small and medium enterprises are also said to be responsible for driving innovation and competition in many economic sectors. It plays an essential role in the development of any country. They can be as limited as the energy of growth in developing economies. Furthermore, relationship banking can be defined as the provision of financial services by a financial intermediary that invests in obtaining customer-specific information, often proprietary in nature, evaluates the profitability of these investments through multiple interactions with the same customer over time and or across products. This definition centers around two critical dimensions: proprietary information and multiple interactions. Now let's welcome Zhekan Xue to introduce the risk and return of small and medium enterprises for you.
Hello, I'm Zhekan. I will introduce the potential risk of bank loaning money to SMEs and the returns that SMEs can get from bank. If bank loan money to SMEs, the firstly bank will face the default risk. Most of SMEs lack of credit. Borrower may not pay money as requirement. Secondly, the scale of SMEs is small. They have few market share, low anti-risk capabilities. Thus, SMEs is easily bankrupt. The third is operating risk. Because the structure of SMEs is not completed, they lack of professional talents. Therefore, the competitive power is weak. Regarding to available returns that SMEs can get from bank, the first is low interest rate. Bank provide loans at a lower interest rate than other lending agencies and instruments like credit cards. The second is a stable capital source. Banks have sufficient capital. If they achieve long-term cooperation, it will help a lot in the SME's future developments. The third is non-profit sharing. Venture capitalists and angel investors agree to provide a loan in exchange for partner ownership, the right to influence decision making and a share of the profit. Banks do not ask for any of these. If they do sanction a loan, they are only interested in getting their interests and partial loan payment in settlements. Finally, SMEs can get a tax relief on the policy. That's all. Next, welcome Junni to introduce relationship banking.
Today, I will introduce the risk and the return to relationship banking. The first risk is adverse selection. Relationship bank is difficult to distinguish between the qualities of different projects presented for funding by the different SME borrowers. However, these SME borrowers know more about this project, and as a result of this problem, the bank might end up selecting the bad project. The second risk is asymmetric information issue. An example is where an SME borrower is likely to have more information about the project for which a loan is sought than the bank has. Information asymmetry can give rise to situations of adverse selection and moral hazard. The third is moral hazard issue. For example, a SME borrower may act in a way that is detrimental to the repayment of loan by engaging in more risky activities than that initially agreed with relationship bank. Let's talk about the return. The benefit of relationship banking is reduction in the marginal cost of information production. This reduction is achieved through increased firm-specific information, which the bank can use multiple times during the relationship period when providing the same or other financial services. Relationship banking provides financial services or products include letters of credit, payrolls, cash management services or deposits. In turn, this repetitive interaction over product and over time would increase the bank's assessment restriction about the SMEs, then allow the bank to spread any fixed costs of producing information. Third, and reduce the bank's cost of providing more loans and services. Next, my group member will introduce the result and recommendation.
Now it's me to introduce the result on relationship banking with SMEs and based on the result give some recommendations to improve the relationship. According to the research, there are three main results. First is the SMEs with longer bank relationship would have enhanced access to the loan, so they can get more loans, but at the same time they would incur higher costs for the debate. The second is the SMEs have a relationship with only two banks would have lower cost for the loans. The third is SMEs working with more than two banks. There were no any advantages compared with the first two, and therefore the longer or more concentrated relationship are not always beneficial for the SMEs operating. It depends on the numbers of banks and they have relationship with. So based on the result, I will give some recommendations to improve the relationship with banking and the SMEs. For the SMEs, the small countries need to work actively with the banks, and meanwhile, they need to directly demonstrate their creditworthiness to improve the relationship with banks. And how about the bank? For the banks, the country's institution may well developed, so it allows banks to use more standard data and lending procedures. It also needs banks to become more engaged, proactive, and innovative in the SME arena. It also can help banks to build a good reputation for the SMEs. So it's all the presentation. Thank you for your listening.